Hey everyone! Today we're talking about something really interesting. Warren Buffett, the world's most famous investor, is doing something he almost never does. And that is selling a business. I know, it sounds crazy, right? Buffett is known for never selling businesses. But recently, he's considering selling Berkshire Hathaway's real estate brokerage business, Berkshire Hathaway Home Services. And when Buffett does something, it's always worth paying attention to. So let's break down what this could mean for the real estate market and what Buffett's move signals for the future. Now, Buffett rarely sells businesses. In fact, the last time he did was in 2020 when he sold a newspaper business and a workers' comp business in 2019. That's it. He's a buy-and-hold investor. So why is he considering parting ways with his real estate business, a company that he acquired when it was called Prudential Real Estate and turned into Berkshire Hathaway Home Services? Well, we've seen some major shifts in the real estate market in recent years, especially after the pandemic. Low interest rates led to a massive speculative boom in real estate. We saw property prices soar, Airbnbs explode, and people buying homes with little regard for market dynamics or valuations. But that's changing now. Today, we're dealing with a very different scenario. Interest rates are high, home sales are slowing, and just like the early 1980s, we're seeing a volume collapse. This doesn't mean home prices are crashing everywhere, but the volume of transactions, how many homes are actually being sold, has plummeted. And that's a huge issue for real estate brokerages like Berkshire Hathaway Home Services. Here's the thing. Real estate brokerages make money based on the volume of sales, not necessarily the prices of the properties. When volumes are high, real estate agents and brokerages make money hand over fist. But when sales slow down like they have now, the entire business model starts to struggle. And that's where Buffett comes in. Buffett doesn't like holding on to businesses that are on a declining trajectory. So when he sees volumes collapsing, it's a big red flag for him. In fact, a lot of experts, including Berenberg, have suggested that Buffett just doesn't like selling anything. But here we are, with him potentially selling a key business. And this isn't the first time we've seen something like this. We've seen similar trends before, back in the early 1980s, for example. At that time, there was high inflation and the Fed was raising interest rates to fight it. This led to 2 recessions in the early part of the decade. But what happened in the real estate market during those times wasn't necessarily a crash in home prices. Instead, it was a collapse in sales volumes. In fact, the early 1980s saw some of the lowest turnover in real estate history. Sales of existing homes dropped below 2 million units, a level that we haven't seen in decades. Fast forward to the pandemic years, and we saw an explosion in home sales, with 6 million homes turning over in a year, one of the highest numbers ever recorded. But now, we're back to the kind of environment we saw in the 80s, with volumes collapsing again, thanks to rising interest rates and more cautious buyers. Now, this doesn't mean home prices are crashing everywhere. In fact, across the country, home prices are still up about 3% year over year, despite the slowdown. But in some areas, like parts of Florida and Austin, Texas, home prices have been hit hard by the 2022 boom, and they're still negative year over year. This shows us that some markets were overbuilt during the pandemic and are now correcting. However, other markets like San Diego are still seeing home prices rise year after year, even in the face of a slowing market. And that's because certain regions have specific dynamics. California, for example, has crazy policies that make it nearly impossible to build new homes, which drives up the price of existing properties. On the other hand, places like Texas have a more builder-friendly environment, leading to an oversupply of homes and, in some cases, price corrections. But what does this mean for Buffett? Well, Buffett's move could be signaling that he's seeing a shift in the real estate market that he doesn't want to be part of. Brokerages like Berkshire Hathaway Home Services make their money off of volume, and with volumes dropping, these companies are facing pressure. This is where we're seeing the disruption from companies like Redfin and Rocket Mortgage. These companies operate under completely different business models, and they're able to capture market share as traditional brokerages struggle to adapt. Redfin, for example, uses salaried agents rather than independent contractors, and they have a completely different approach to real estate. Rocket Mortgage, meanwhile, has disrupted the lending side of the business by eliminating the traditional relationships between agents and lenders. These changes are forcing traditional brokerages to rethink how they operate. That brings us to Compass, which is looking to acquire Berkshire Hathaway's real estate unit. Compass, like Redfin and Rocket, offers real estate agents the ability to work on a commission model that's more flexible and modern than the traditional brokerage setup. And with the pressure on volumes and margins, Compass might be able to pick up Berkshire Hathaway's business at a discount, which makes it an attractive acquisition. What Buffett is likely seeing is that traditional real estate businesses, like the one Berkshire Hathaway owns, are being disrupted by more innovative companies. And with real estate sales volumes continuing to decline, these traditional brokerages are having a harder time making money. So, instead of holding on to a legacy business that's becoming less profitable, Buffett might be looking to cash out and focus on other opportunities. But it's not just about getting out of a struggling business. It's also about positioning for future opportunities. Buffett is known for making big moves when others are fearful. And with the real estate market slowing down, there could be some great deals to be had in the coming months and years, especially if we enter a recession. Look at Rocket Mortgage and Redfin. Both are trading at a discount, and Rocket is getting a steal by acquiring Redfin at these low prices. In the future, we could see Rocket Mortgage increase its market share, especially if we see refinancing activity pick up as interest rates start to come down. But regardless of the specific companies involved, the key takeaway here is that the real estate market is shifting. Sales volumes are dropping, and traditional businesses are facing pressure. Buffett's decision to potentially sell Berkshire Hathaway's real estate business is a reflection of this broader trend. And while it doesn't necessarily signal a crash in home prices, it does point to significant changes in the way the real estate market operates. So, what should you take away from all of this? First, keep an eye on the real estate market. We're in a period of transition, and there could be opportunities to buy the dip in certain markets, especially in areas like Florida or Texas that saw huge bubbles in 2022. Second, be cautious with real estate companies, especially brokerages. The pressure on volumes and margins is real, and it's forcing companies to adapt or get left behind. As always, when Buffett makes a move, it's worth paying attention. And right now, it looks like he's positioning himself for something bigger down the road. Thanks for watching, and if you found this analysis helpful, feel free to subscribe for more updates on real estate and the economy. I'll keep you updated with the latest trends and insights. See you in the next one.